Welcome to Libertex. Day trading is not for the faint of heart, but if you're interested in doing day trading the right way, this video is for you. We'll be breaking down the 5 best day trading tips and secrets to give you an edge when opening and closing your trades for the successful short-term trader. As we all know, some strike it rich in day trading while others crash and burn. To day trade with a high degree of success, traders need to keep these tips in centerfold. But before we get started, if you're looking for weekly analyst-driven content on trading strategies, the latest cryptocurrency and stock news, and the biggest developments from inside the markets, subscribe to our channel to join our family of traders and investors, and don't forget to hit that like button. Your support helps fuel more content and is highly appreciated. So let's get into the top 5 day trading tips. When the markets are closed, many take the time to formulate a strategy for what stocks and assets to watch for the coming week and make plans to take action. This leads us to our first tip for day trading. Do not FOMO in when the market opens. If you're researching trades over the weekend or when the market is closed, you may be very excited about getting in as soon as possible. However, when entering into a trade, especially if you are going for a day trade, you want to get a sense of how it's trading. Only in very rare circumstances does a trade open high and continue to run higher throughout the entire day. If you want to realize success with your day trading, wait for a dip, assess how the dip compares to previous trading days, and then make the decision to enter the trade with this insight. If you are entering into a trade at open, you are taking a big risk without any indication of where it will take you throughout the course of the trading day. And more often than not, there will be a much more optimal time during the course of the day to establish your position. This leads us to our second tip. Buy low in order to sell high. When you are day trading, short-term movements and swings are everything. As a result, you never want to enter a trade for the short term if it's already up over 1 or 2%. Almost always, for success in day trading, you should strive to be buying in the red, where you are confident the trade is at its lowest, to then get in as it climbs back up. If you're not strict with this, you may enter into a trade while it's climbing up, only to discover that you are on the tail end of the climb, and are now left holding the bag as the assets start dropping down below where you bought in at. This leads us directly into our third tip for day trading. Know when to get out. Before you enter a trade, set expectations and rules for yourself so you don't get greedy or blinded by unrealistic expectations. If you stick with a more conservative approach for your day trading, you are likely to encounter more wins than with a loose approach. For example, set a percentage of your trades with levels that you can realistically be content with to close positions. It may be 10%, 20%, or 30%, but having expectations of 100% or beyond type gains can lead to disaster and heavy bag holding. Remember the mantra, taking profits, no matter the amount, is still profit, and no one can fault you for it. Our fourth trading tip for day traders is getting comfortable with stop loss settings. Setting stop losses is an essential part of an enhanced day trading strategy. The reason this is so is that if you find yourself on the losing side of a trade, you won't face the severity of the loss and can get out of the trade before more serious losses are incurred. A 5 or 10% loss is much better than a 100% loss, and will allow you to place more trades and diversify your day trading strategy, allowing you the opportunity to get in and out of low-performing trades without too much pain. That said, you should not trade with money you are not comfortable with losing. It's recommended that you set stop losses for where you are comfortable with, around 10% levels or around previous areas of support and moving day averages. Another key advantage of trading with stop losses is that you do not need to as vigilantly monitor your trades and keep your eyes glued to the chart like you would need to do without any protection. Because day trades can swing violently, having an added layer of protection can give you more control and confidence in your day trades, as well as save you thousands of dollars in unanticipated losses. Our fifth and final day trading tip is to always do your own research and due diligence. If you are going into short-term trades based on loose information found on community forums, Reddit, or elsewhere, there is a high probability that you will get burned, and that the action has already been priced into the asset. Build out a watch list of stocks and assets that you find interesting, and research the latest developments with them. Understand how they trade and what range they typically trade in, so that you can easily identify big changes or sudden anomalies to try to capitalize on. It's recommended to avoid penny stocks and speculation plays in favors of companies with solid backing and standing. Remember though, if you're day trading, the goal is to get in and get out, so always have your expectations in check and do not get greedy. Do you have any trading mantras or strategies that you hold tightly to? Let us know about some of your worst mistakes and biggest wins in the market, and consider opening up a free account at libertex.com or via the links in the description below for a better trading platform equipped with market signals and all the tools used by the pros. We hope these 5 tips help you get more out of your trades this year, and if you like this video, don't forget to hit those like and subscribe buttons. Thanks for watching, and see you next time.